Hi everyone and welcome to the weekly update with me, Richard, Fair Market Analyst at Handtech Markets. Each week I take through key events I believe will be driving more investments in the coming days. Now, moving into this week, we've had a fairly choppy move actually. It's President's Day on Monday, so we've not got a huge amount of market direction on Monday morning. However, this week we do have a fairly quiet economic calendar ahead, so we're sort of reacting still to anything that comes out of Donald Trump's mouth really at the moment, and it does have a tendency to sort of move markets depending on whether he's talking about the protectionist issues or not that obviously irk him, and also the sort of fiscal side of spending, the domestic aspect of his presidency, which I think will sort of become a feature of this Trump presidency, and also how markets react to it in the coming months. Now, he's said this, he's got a phenomenal tax plan up his sleeve. We'll wait to see what exactly that comes about, but I think the markets will be sort of moving towards pricing that in, and certainly that is the potential to be inflationary, and certainly we are getting inflation coming through the system now that you've got US data that's coming out increasingly positive, and I think the Fed are going to have to react to that. Obviously, we had that congressional testimony from Janet Yellen last week. That's has sort of put a bit of a hawkish sort of steer to markets at the moment in terms of how they're sort of looking towards Fed policy going forward. At the moment, the markets are just prior to Yellen, they were pricing in pretty solidly just the 2 rate hikes this year, maybe even now after Yellen, maybe pushing towards 3. So I think the markets are going to be sort of teetering around that 2 to 3 rate hikes this year. We've got the FOMC minutes this week, which certainly I think could have a bit more of a clue as to whether we get a March rate hike or not, and it'll be interesting to see how the markets react there. But generally speaking, not a huge amount this week in terms of economic drivers, because there's not a great deal of economic sort of movement on the calendar. Now, moving onto the Forex markets, we've got a fairly strong dollar, not hugely, not massively strong, broadly because we've got the treasury yields, which are not really going that sort of got too much direction at the moment. They're a bit choppy, they're up and down. I've got the chart of the 2-year treasury yield on the page here, and it sort of shows you fairly range bound between sort of 113, I think it is, up to 130. Not a great deal of direction moving sideways, and I think that's fairly indicative of what we've seen in the dollar in recent months, actually, sort of a choppy range-wise. So that's what we're seeing on the Forex market at the moment. We're seeing it a little bit up, a little bit down. The euro-dollar formed a bit of support last week, rallied a bit, but it's dropped away again, and it's pretty much seems as though they're sort of testing the support around 105.75 level again. But as I said, without US trading too greatly on President's Day, we're not going to see a great deal of direction today. Now, in terms of cable, there is a mild dollar strength again, filtering through lower highs and now lower lows. We've seen a close on Friday below 24.30. That sort of puts pressure back to the downside. I think another close below 24.30, which is basically a mid-range pivot. I think that will again begin to sort of drag cable lower. In terms of dollar yen, range bound again, we've seen a little drop back towards 112.50, formed support above that and rallied. Not yet really closed below 12.50, which I think would put a negative spin on the outlook near term for dollar yen. But dollar yen sort of pulling lower tends to be seen as a safe haven trade. Basically on the back of Trump giving sort of uncertainty around the presidency, but also the political risk in the eurozone as well. So that's one of the reasons why dollar yen's been pulling lower. But if Trump comes out and pulls a rabbit hat with this huge taxation plan that he's got, then you can imagine dollar yen to start spiking higher again. So a bit of uncertainty with that one. But in terms of your equity markets, they have been positive and they remain so. Wall Street reacted very positively to Donald Trump's suggestion of a phenomenal tax plan, and I think that continues to be play out a part there with the moves to all-time highs. Not really seeing a corrective move yet, even though a lot of the indicators are suggesting perhaps overbought conditions are in play. You've got the DAX, which is pushing higher, consolidating above 11,700. FTSE again pulling higher in a trend channel, consolidating now above the 7,250. So these markets are still all looking fairly solid. In terms of your commodities, the safe haven flow has helped gold higher, and that comes despite the dollar sort of moves that we've seen in recent weeks. That just reflects that there is still a little bit of a preference towards safe havens at the moment, a little bit of concern in the market, and I think that will be underpinned by the issues surrounding the French election and obviously any sort of protectionist issues that Donald Trump tends to sort of poke his finger into. And in terms of oil, again, still range trading, $5 of range on oil, on Brent and WTI. Nothing really doing in terms of a little bit of uptick on Monday, whether it breaks out. I mean, WTI sort of testing 54. It tends to be around about where the limit comes in recent days, so 54 is a bit of a resistance area on WTI. But much beyond that, in terms of the economic calendar we're looking out for, not a huge amount. We've got a little bit of UK growth, second reading of UK growth this week, 0.6% for the Q4 growth. Nothing really exceptional in terms of outperformance or underperformance on that number. And also we're looking at a little bit of housing data for the States, but generally speaking, it's pretty much the Fed minutes on Wednesday will be the only real sort of big market mover, I think, this week. So with that in mind, we should go back into trading, and I'll speak to you again next time.